Good afternoon and welcome to NYFP. In midday trade on this Tuesday, the major stock averages are holding on to session gains. Joining me today is Ben Willis of Albert Fried & Company. Ben, good afternoon and thank you so much for joining me.
Pleasure to be here. Thanks for having me.
Well, the Dow Jones Industrial Average hit another intraday high, and European markets were also higher after the long holiday weekend. We did get some better than expected U.S. factory orders, but we did see plenty of weakness in terms of Eurozone data. So what do you make of today's U.S. equity market action?
April Fool's Day. We just didn't have it. It was April Fool's Day for Europe is what it comes down to, in my opinion. Yesterday, first day of the quarter, first day of the month. Normally you'd see an upside move, but we had the lack of flows coming out of Europe, and I think that's what we're seeing today. The European numbers, some of their economic numbers were a little disappointing, but the world PMI number is still the fifth straight consecutive reading to the plus side. So the glass is half full, getting better, and the United States of America equity markets have become the de facto safe haven. So while it may not be safe to invest in some specific countries in Europe, the Europeans definitely appear to feel that this is a great place to invest.
And as European markets came back from the holiday weekend, we did get some dismal unemployment figures, with the youth unemployment rate staggering in many of the nations. We have the European Central Bank meeting as well as rate decision on Thursday. So we might get some comments out from Draghi, especially given what we've seen out of Cyprus. The last time we spoke, we did hear about the resignation of the Cyprus finance minister, and it does appear as though the president of that island nation has accepted that resignation. But going forward for that country, what can we expect?
I wouldn't put too much stock in anything that's going on in Cyprus. I think the big concern to the market throughout the world was that the idea that it was a template, and those the words obviously used by the head of the ECB, Dieselbloem, and who backed away from that. That's the concern, that this is a political entity that felt it was within their power to confiscate funds from private individuals without any vote, any say on the matter, taxation without representation. And I think that's what we witnessed, and that's the real fear of the marketplace. If they are willing to do this in Cyprus, where else are they willing to do that? Cyprus is, as a standalone, is not, as we said, it's the size of Vermont as far as GDP. It's not a big player, but the question is what type of blueprint was created in this confiscation.
And also out of Cyprus, it does appear as though they will get 2 more years to meet some of those bailout measures. So we'll keep an eye on what happens in terms of the ECB meeting. But in terms of event risk coming up, we have the U.S. jobs report coming out on Friday, and earnings season also gets underway here in the U.S. Next week. So for the upcoming sessions, what will you be keeping your eyes on?
Well, I think the granddaddy of all economic data is the U.S. unemployment number. That's really what we have to keep an eye on. So that being said, we'll get a little taste tomorrow with the ADP number, which I think is a very good trend indicator. They don't always align with the U.S. numbers, but it's been a pretty good trend indicator where we're headed in the right direction. So those are the big numbers for the week, and that'll give us a better idea. I am still of the mindset this market has been ridiculously strong to the upside. The bull just will not give up. It needs to take a breather. We've had very minor dips, and there appears to be, analogous of sweeping water off the sidewalk. You run the broom through it, you think it's done, and the tide of money coming back into this market from the individual investor just fills right back in. So it hasn't been volatile, but the underpinnings of this market is showing some real strength that for a professional trader after 30 years, it's pretty amazing to watch.
And last but not least, before we wrap it up, since we are talking about what we're seeing in the equity markets, are there any technical levels you're keeping your eyes on?
No, because they've all been, the technical analysis of this market has really been not functioning well, quite frankly, because if you looked at them, they would be telling you that the market should have corrected. So we just continue to push through new highs. We watch that flow of money come in, whether it's European or individual American investors coming into the equity markets. Anytime we've had any type of a pullback, it's been very minor. We haven't had a percentage move since February. We had about a 3% correction, not significant enough. I would hope for a 5%, but the higher we go and without any pullback, it makes me wonder if 5% is really going to be enough. Those are going to take 10%, but we had a great year last quarter, so people have to keep that in mind.
Well, then we'll keep an eye on what happens heading into the close. So thank you so much for your insight in terms of technicals and fundamentals.
Thank you.